Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Monday the 13th of January in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the UK's Chancellor Rachel Reeves returns from China to a pound that's weakening further and a fragile bond market still worried about the government's fiscal plans.
Almost 8 million people are facing fresh risks from the Los Angeles wildfires as officials say more high winds could fan the flames burning California.
Plus, succeeding in space, Amazon co-founder Jeff Bezos tells Bloomberg the rocket industry has room for multiple winners.
Let's start with a roundup of our top stories.
The UK's Chancellor Rachel Reeves returns from China, promising her fiscal rules are non-negotiable. That's after fears over the UK's rising inflation, weak growth and the government's spending plans pushed yields on 10-year gilts to their highest since 2008 amid a global bond drought. Rachel Reeves also doubled down on her government's aim of economic growth.
Growth is the number one mission of this Labour government, and to grow the economy we need to help great British businesses export around the world, and that's why I've got with me a delegation of senior UK finance bosses to unlock tangible benefits to help British businesses export and trade with the second largest economy in the world, and always doing that in the UK's national interest.
Reeves there speaking over the weekend in China. The Prime Minister Keir Starmer is also trying to boost the UK's growth prospects. He's set to launch a new AI plan later today, promising to integrate the new technology into public services to make them more productive.
Now, traders in the options markets are preparing for the pound to tumble after the UK sell-off last week. Demand for pound options rose 300%, surpassing levels seen during the Liz Truss episode and even the Brexit referendum. The positioning comes ahead of UK inflation data out on Wednesday, which economists expect to see hitting a 9-month high. Right now, cable trading at 121.49, so the pound down 0.5% against the US dollar.
Nearly 8 million people in the greater Los Angeles area are being warned about further potential wildfires. The US National Weather Service expects more dry, hot winds in the coming days. That's going to limit firefighters from making progress on the ongoing blazes and risks new wildfires starting. FEMA Administrator Deanna Criswell says the crisis is not over.
The biggest concern that I have right now is the fact that we are still in such a dangerous situation. The red flag warnings have been reissued, the winds are coming back, and we still want to make sure that people are in a safe place. And I know that that's hard for so many because they want to get back in, they want to see their home, they want to see if there is anything left.
Deanne Criswell there speaking on ABC's This Week. The fires are the most devastating natural disaster to hit Los Angeles in decades, with 24 people now confirmed dead. The economic costs, meanwhile, are expected to rank among the highest in modern US history.
Now to oil markets, where prices have hit a 4-month high as fresh US sanctions against Russia's energy industry threaten to limit global supplies. The outgoing Biden administration imposed the most aggressive restrictions yet on Russian oil on Friday, targeting large exporters, insurance companies and more than 150 tankers, Russia's so-called shadow fleet. Following the move, Brent advanced above $81 a barrel after surging almost 4% in the previous session, whilst WTI crude oil was near $78. The price increase may present a challenge for central bankers if it leads to stickier inflation, but the actual impact on crude flows remains uncertain.
Jamie Dimon says tariffs can help resolve competition and security issues if properly used. Speaking during an interview with CBS News, the JPMorgan CEO added that he hasn't spoken with US President-elect Donald Trump about the measures.
To me, tariffs are a way, are a tool, properly used, that can help get some of those issues resolved. Unfair competition, national security issues. You know, if like any tool, if it's misused, yeah, it can do damage too.
Jamie Dimon there. He also expressed continued concern about the current geopolitical situation, repeating warnings that it is the most precarious situation since World War II, and offering to help the incoming president's staff with policy matters. Trump, who's due to take office on the 20th of January, has vowed to slap new charges on imports from US adversaries such as China, as well as allies including Canada and Mexico.
Billionaire Jeff Bezos says that the space industry has room for multiple winners, including his own firm Blue Origin and rival SpaceX. Speaking to Bloomberg before his company's first orbital rocket launch attempt, the Amazon founder expressed hope that NASA's Artemis mission, which aims to send humans to the moon, will continue under Donald Trump. Blue Origin's New Glenn rocket is expected to launch this morning, the first of between 6 and 8 New Glenn flights in 2025, according to the company's CEO, Dave Limp. Bezos, who serves as executive chair of Amazon, also said that working at Blue Origin has become his full-time job.
Those are your top stories on the markets. We are looking at the follow-on from Friday's blowout US jobs report, where we saw 10-year Treasury yields rise 7 basis points to 4.75%. The S&P 500 finished down 1.5%, and futures are pointing lower again this morning. Markets slashing Fed rate cut pricing. The next cut from the Fed isn't now expected until October. Market prices only one more cut left in this cycle. European stock futures are also pointing lower this morning, down 0.3 for Eurostoxx 50 futures. In Asia, we're seeing a sell-off on equities continue there. The MSCI Asia Pacific Index outside of Japan down 1.6%. Oil prices rising 1.8% today, $81.16 on Brent crude.
In a moment, we're going to bring you more on the UK's economic woes, which followed Rachel Reeves to China, and talk you through the moves that we are seeing in currency markets today with the pound weakening further. But another story also caught my eye this morning. I was reading Palmy Olsen on Mark Zuckerberg and the announcement that he made last week about the end of fact-checking on Facebook and Instagram. It was quite interesting because, of course, he left out a part that is of interest to people in Europe, because that issue of the end of fact-checking only applies in the US. The EU is rolling out a law to target disinformation. So Palmy's titled her story The Splinternet, and it's all about how, what has been a fairly global internet actually may start to look very different whether you're sitting in Europe or the US, and as to what you actually see.
Yeah, and look, this feeds into the broader geopolitical stories as well, is that how will that more stringent regulation of big tech companies, the lion's share of which are American, is going to play into the relationship that Donald Trump's going to have with countries in the European Union. Yeah,
absolutely. So this, the so-called Brussels effect, where you've had Brussels making rules for internet companies, and then it's sort of cheaper to do that globally, that may be coming to an end. So is it a kind of decoupling of the relations between the US and European internet users? This is Palmy Olsen's argument this morning.
Well, let's bring you more in our top story now, and the trip by the UK's Chancellor Rachel Reeves to China. This is the government is trying to move on from last week's bond rout, but we are seeing further market pressure on the UK this morning with a weakening in sterling. Our UK correspondent Lizzie Burton joins us now for more. Lizzie, what did Rachel Reeves get out of this trip to China?
Well, so the big number that they've been touting is this £600 million worth of deals to the British economy over the next 5 years. The estimated long-term benefits worth up to £1 billion. You had Reeves meeting with the Chinese Vice Premier He Lifeng in Beijing, officials agreeing to deepen the financial services links and lift certain export barriers. So all of it feeding into this top mission for the government, which is, of course, growth. You heard the Chancellor talking about it there. But interestingly, Stephen, we talked, hadn't we, about whether it would be possible to separate out trade and investment from this conversation about broader geopolitical issues. Reeves chose not to make that split, and actually the Treasury says that she raised concerns over interference in the UK's national security, and about China's support for Russia's defence industry, and about human rights issues as well. For China's part, Beijing's really trying to shore up ties with Washington's friends before Donald Trump comes back to the White House. So you've seen President Xi on the charm offensive with Japan, India and Australia, doing what he can before another round of tariff wars. And this was the latest example with the UK as well.
OK. Reeves could not avoid so many questions about the market turmoil here in the UK. What was her message?
Yeah, and of course she'd been under pressure to cancel the trip, but the signal that she's trying to give is that Labour is focused on long-term economic growth. So her message was her fiscal rules are non-negotiable, which basically acknowledges that if she runs out of headroom, where the fiscal watchdog, the Office for Budget Responsibility, makes its estimate of that in March, she is either going to have to raise taxes or cut spending, and she's indicated to us that she would choose spending cuts. Now, we'll see whether this message is enough to calm markets at the open. As you say, last week we had the 10-year gilt yield at its highest since 2008. Cable's been at its weakest since 2023, and we report that traders in the options market are braced for an 8% fall on sterling, some of them betting for it to fall below $1.12, which would be the weakest in more than 2 years. So really interesting to watch UK markets in particular this morning.
OK, Lizzie Burden, our UK correspondent, thank you very much. Well, let's stick with the market reaction to what we're seeing to the last week's global bond rate, continuing further pressure on sterling today. And of course, the blowout US jobs report, a key part of the moves that we saw on Friday. Our market supporter Valerie Teitel is with us now. Can you just talk us through, Lizzie mentioned it there, some of the pressure on the pound being renewed today, and this question about what options traders are betting on in terms of where sterling goes from here. We're looking at it 0.5% weaker this morning. What's going on?
It's very notable, or at least interesting to me, that we're seeing such a weakness in cable to start the session. Gilt markets don't open for another hour, but it's looking like it could be another shaky day or another shaky open for UK assets with this move in sterling. I do want to talk a little bit about what we have been seeing in the FX market. We've been seeing a big surge in option volume, which is it eclipsed the volume that we saw even around the Brexit referendum and even around the Liz Truss era. And it's one or two parts. Yes, you can say that the market is bracing for further downside, but what the market is really positioning for is the risk of another vol surge kind of blow up that we did see around the Liz Truss, the 2022 move. So in some way, that spike in volatility and cable plummeting, traders are just positioning for another thing like that. I wouldn't necessarily say that they're calling for an 8% slide. They're just hedging their bets that we are getting closer, or maybe could be risking another volatility surge with cable moving lower and gilt yield spiking.
Yeah, and it's about the gilt yields that are so important, but also in the global context, Friday's moves, I mean, Bloomberg Economics got it right in terms of the figure, the expectations. It was a really strong month in terms of US job creation. How did that impact on the thinking around the Fed and global interest rates and market moves?
We saw calls for Fed cuts from Wall Street banks being slashed. Frankly, Bank of America is now calling the Fed's cutting cycle over. They are saying that rate cuts are so 2024, and they're moving the conversation to hikes in 2025. We also had Goldman Sachs, Barclays, JPMorgan all removing one cut from their calls for Fed cuts this year. And on the back of that, the market very much it reacted the same. We now are pricing the next full cut not until October this year, and the market is very much settled on just one cut left from the Fed this year. And that has, again, if we tie this all to what's going on here in the UK, that's boosted the dollar, which is also, another headwind, for the cable currency here. And if we look at even what just happened overnight, Bloomberg Dollar Index hit another fresh 2-year high. It's now risen at nearly 9% since that Trump trade, since that tariff narrative really took the market's attention back in September. So it's becoming, our currency, your problem when it comes to the dollar story. And you can even tie that into what's going on in the Treasury market, too. The U.S. is saying, hey, it's our deficit, our Treasury market, your problem. The U.S. economy can do okay with 5% yields, but it's going to become a headache to those economies globally who don't have the positive growth behind it that the U.S. does.
We're looking ahead into this week. We've got US inflation data. We've also got UK inflation data as well. If we're thinking about the outlook for both the Fed and the Bank of England. I mean, what should we be saying about the expectations around the data for this week?
Look, in terms of what to expect this week, yes, we do have those CPI figures out from the US and the UK, but I think the bigger narrative and the bigger risk out there is more leaks from the Trump administration about their tariff policy. We're now 7 days away from Inauguration Day, and there was a big thought out there that we would get more leaked about where Trump intends to go with his tariffs. What is he intending on moving on first, the tax policy or being tough on tariffs? We haven't really gotten a clear picture from the Trump administration or from his team on what they're deciding to do first. So I do think the market might be a bit vulnerable to trading off of headlines around any further leaks from tariffs from the Trump administration.
Yeah, it does seem to be that uncertainty around US policy is really becoming heightened in markets, with just so many scenarios being thought about, and that's actually quite difficult. In terms of the oil markets this morning, though, the outgoing Biden administration, quite interestingly, rolling out the most sort of severe sanctions against Russian oil exports that we've seen. What's that doing to markets, and how do we think about that?
Well, the last two sessions, Friday session and then again overnight, has seen a near 3% jump in oil. Oil, even from the beginning of the year, has risen 8% plus, depending on which Brent or WTI you're looking at. But there's a bit of skepticism out there on whether these sanctions are going to stay in place for a long time, or whether this is just a last-ditch hope from the Biden administration to push forward tougher sanctions on Russia. We do know that Trump has called for an end to the Ukraine war. He wants a peace decision to happen quickly, and he's threatened, I guess, to do that as soon as he can out of the gates. And he's even, gone to the effect of inviting Putin to Mar-a-Lago. So I think the long-term look on these sanctions is that maybe they won't be this tough in the future. This is just a temporary hope or last-ditch attempt from the Biden administration to penalize Russian energy exports.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.